is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's Thanksgiving week, folks. Gotta be a nice one. Always do your best, but don't overdo. When you overdo, you deplete your body and you go against yourself, and it'll take longer to accomplish your goal. Market-wise, let's take a look at it out here. We have the Dow Industrials up 86. NASDAQ is up 9. S&Ps are up 7. Gold contract down $20.20 at $12.76 an ounce. Silver down 47 cents, $16.89 an ounce. Platinum down 30 bucks, $9.22 an ounce. Copper up 2 pennies at $3.08 a pound. Light sweet crude off 46 cents, trading $56.09 a barrel. Notes, 10-year note down 6 ticks, 124.22. 30-year bond flat, 153.25. King dollar up 435 ticks, trading at 94.010. The euro is at 117.25 to the U.S. dollar. The yen is at 112 and just over half to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. I want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You are trading up 55 cents in the SPY. You're at 258.49. Bottom line, you're still at the top of this range. We've been up here since the November 1st time frame, October 14th time frame. Dow Industrials. Go take a look at the Dow Industrials. Dow Industrials up 82 bucks. Same type of setup. We're right where we were October 24th, 23,441. Bottom line, you're going to have light volume, I suspect, out here today. We're going to get 1.3 inside the inside the NASDAQ right now. You are trading at 404 inside the NYSE. That'll kick it up to about 650 probably. Bottom line is that you can expect, as we're going through this holiday week, that you will get a contraction of volume once again. I expect, the markets are closed Thursday. They're open Friday. They can really move this market Friday up. That's what I mean. They can move it anywhere they want because there's not going to be a lot of people around. But when you have a market that is expansion like this on a continual basis, this is not backing off its high. NASDAQ Composite also up to $8.30 at $67.91. We go take a look at the NDX 100. NDX 100 right now trading flat, down $3, 63.31. Gold contract. What do we have with gold? They slam gold again. Bottom line, you are down with 393,000 contracts. You're down $20. Now, it hasn't got into the lower swing, but I suspect that low from last week is going to try to get tested. That's 1269.70. The swing point is actually down at 1263.80 from October 26th. You know, if we can't make it to that lower swing, meaning to 1269.70, it's going to be quite impressive. Silver's the same type of setup. They brought silver down fast, furious, down 476, or 47 cents rather. this contract here, so on the March contract, I already looked at December. We're rolling right to the March right now. March contract, they'd have to break 1688. Excuse me, folks. We got the 1692 today. Right now, you're at 1699. 10-year note. What do we have at the 10-year note? 10-year note right now, trading down 6 ticks, 1.1 million contracts. This is going against where it broke topside from. It went topside with 1.7 million. You made the last low at 1.23 million. That low is 124.16. Well, we hit 124.22. More than likely, we'll see that get hit tomorrow. 30-year bond out here is flat. That's trading 153.25. That's done 206,000 contracts. Now, that's a back down with light volume. This 30-year still wants higher price. The 30-year came into its swing area of 154.05 last week, and it came in with good volume. So I expect that's going to launch that area and get into this 158 area. If we take a look at the yields out here, what you're looking at is that the 10-year yield right now is 2.36. And we get over and we take a look at the 30-year yield, you're going to see it's 2.78. And what's happening there, folks, that's a flattening yield curve, the difference between the 10 and the 30. You're going to see that that's pretty dramatic. So watch this again, just so you see. The 10 is at 2.367. The 30 is at 2.78. It's not bad. When you think if you could actually get money for 30 years at 2.78, that'd be pretty amazing. Let's go take a look at the PPLT. The PPLT is the ETF, Platinum ETF. That is trading at 88.14. Yeah, this is, for Platinum getting whacked like that, it's not bad. Yeah, you're down on 46,000 shares. You're coming into 93,000. The high of that is $87. Excuse me, folks, and 60 cents. They can get down to that, but that's not a bad move for the way that the platinum market is getting whacked out here, no doubt. Some of the higher volume stocks in this market out here today, you have GE down 18 cents. Advanced Micro is off 6. Square is up $1. You get Marvell up 22 cents. You get Intel flat. Coca-Cola is down 17 cents. Bitcoin's still going to the moon. That's the bottom line, folks. It's pretty amazing watching how an equity, well, not an equity, a digital currency can go from a low last Monday, Tuesday, Wednesday, yeah, last Monday of 56.05, and now you're at 81.83. You're over the highs. Real question is going to be, how much further can you go? Some of the, let's go to the XLE, the energy sector. Energy sector out here. Energy sector is trading at 67.26. That has light volume. It's trying to test this 66.34 area. That's the low of the 27th of October. You stay right there, folks. We'll be coming right back. We have the Dow Industrials right now trading down 73, trading up 73. NASDAQ is up 4, S&P's up 5.5. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials are up 72. You get the Nasdaq up 4. S&Ps are up 5. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the first hour. Now, don't forget, Steve's got a great program right here at TFNN every trading day, folks. 1 to 2 Eastern Standard Time. And, of course, though, as you're coming over to TFNN, you can test drive Steve's newsletter. It's Mastering Probability. The way you do that, you go to TFNN. You go to newsletters, you go to trading newsletters, you can test drive that 30 days absolutely free. Steve Rhodes, what's going on?
Well, Tom, I'm concerned.
Yeah?
You opened up the show with that beautiful card that said something like, don't overdo it. And,
right.
And I'm praying that that does not apply to the Thanksgiving Day dinner table.
Oh, it won't be applied to that.
Okay, good.
To chow down there and take that nap.
Absolutely. Now, are you a dark meat person, a white meat person?
No,
huh?
I'm not. I know.
Okay.
I know it puts a real good flavor in it. There's no doubt. Do you know what I mean? But I like that white meat. Yeah.
Okay. All right. Well, there's always plenty of that.
But I love that when people like the dark meat, because those big legs and everything, it's real easy. It's like, here, you can be the caveman, man.
Exactly. I love it. Well, happy Thanksgiving to you and obviously all of our listeners out there.
You also, thank you.
Yeah, absolutely. So I thought what I'd do is just spend a few minutes with you taking a look at what I am seeing in the markets, and specifically what occurred last week, which based upon all my signals suggests that we've put in the bottom that should then take us up in through the December, the end of the year time frame out there. And a couple of those tools that we'll take a look at. For longtime listeners of the Trader's Edge show at 1 o'clock, one of the things that we pay attention to with regard to the spot volatility index, not with regard to what the value is, whether it's at 9 or 10 or anything, but really one of the things we look at, Tom, is the one-day rate of change, meaning the difference between yesterday's closing and today's closing. And there's an interesting phenomena that occurs when that increase is 10% or more, which would then mean we would have a down, or typically we'd have a down day inside the market. But when the spot VIX index has a one-day rate of change greater than 10%, and those are all of the blue arrows that are on our screen right now that we're taking a look at. What's really cool about this tool is that it helps us to identify over the course of the entire VIX index, this still works, which is that in the course of 48 hours, you're going to see some type of bounce or bottom in the S&P 500. Now, that's really helpful for intraday traders, especially if you're trading the ES out there, because all you have to do is start searching for whatever other patterns might be out there overnight, early in the morning, that might help to identify a bounce or bottom. And usually it's pretty good. And in this case here, we're just seeing the S&P 500, and it's a really great tool for identifying those bounces or bottoms. Now, we had one of those last week, November the 15th out there. And another thing that it happens on occasion is that we also see maybe the very next trading session or the trading session after that, because we did have a nice little move, a very good move actually, after the 15th, was we saw a one-day rate of change that was less than minus 10%. I never know how to really say that, but minus 10% or even lower out there. And we had one of those, and those typically identify initiation moves to higher prices inside the S&P 500. So just simply utilizing that tool that way, it helps us to identify that there's the potential of a bottom. If we expand on that and we take a look at the spot VIX index compared to its 3-month counterpart. So we're looking at the spread here, and that's really referring to the very bottom panel. So the top panel, panel number 2 out here, is the same thing that we were just looking at with regard to the one-day rate of change. But when we apply the ratio between the spot and the 3-month VIX index, bottom panel, when it gets to 1, when that ratio gets to 1 or higher, that also helps us to identify nice bottoms in the market that typically last for a while out here. And those are all of these green lines. So these green lines here are different because they're showing both the combination of the one-day rate of change of 10% or more, positive 10%, and combined with a ratio of 1 or greater. And you can see on this chart, this takes us back several years. This goes back in 2013. Is when we're taking a look at all of those green arrows. So we had one of those signals that came in last week. Now, what I love about signals like these is both on the bullish and the bearish side, because if they fail, they're really communicating something to you and I. So to the extent that it was a bottom, what do I look at next? Well, one of the things that I look at, and this is a snapshot that was taken as of 3 o'clock, is I try to find out, and here I'm taking a look at the New York Stock Exchange, NASDAQ Composite, Dow, and the S&P 500. So one of the things I look for, the very bottom panel, shows the advanced decline oscillator, which is the difference between a 19 and a 39-day exponential moving average. The green line that's at the bottom is kind of our zero level. And the way that you use this is when that oscillator is above zero, it says buyers are in control of the market. When it's below zero, sellers are in control of the market. Well, the NASDAQ Composite on Friday closed above zero, says buyers are back in control. The New York Stock Exchange, as of 3 o'clock, when I took this snapshot, was just above the zero line. Now, if it doesn't close above the zero line, it can still attempt to do that tomorrow. But if it does close above it, it's going to join the ranks of the NASDAQ Composite. The Dow's away from it. But another tool that I take a look at with regard to the spot volatility index is where is it trading in comparison to its 50-day exponential moving average. That is the yellow line on the very bottom right-hand panel of my chart. When price closes below that, that's an indication in the S&P 500 that it is buyers that are in control of the market. So it's a great way to put all of those tools together. So if we get closes above the zero line and the advanced decline oscillator, that tells us that, in fact, we should see the markets continue to move higher. Now, this is an analog chart that only takes a look at the Dow from March of 2009 forward. And that's the blue line out there. 2017 shows us what's taken place in 2017. This does show some little, maybe maneuvering around in towards the middle of December, but a lot of those are just really one day, because this is day by day, just really one day type moves out here. But the market should close higher at the end of the year than where we are trading at right now. That's what this chart is indicating to us. November, we still have November, but this is November's performance, which really is kind of spotty inside of the Dow. But since the 2009 bottom, 4 years higher, 4 years lower. This year right now we're 0.3% higher than where we began the month. But December is a whole different story. In December, since that March 2009 low, we've only had 1 month where the Dow actually finished lower. That was in 2015. Otherwise, we've seen the Dow finish higher. So when I put this together with the bottom signals that we looked at earlier, combined with the tendency for the so-called Santa Claus rally, which really began in August of this year out here, December, this is giving us a story that December should be higher as well. So we've got this high probability between the spot VIX index, the 3-month counterpart out here. We've got another confirmation, which is the fact that the equal weighted ETF for the S&P has made a new all-time high. The SPY has not, but the equal weighted really helps us to show the direction of the market. So I want to wish everybody happy Thanksgiving. It's going to be a very nice December out here, and folks should expect and anticipate that the markets are going to continue to move higher. A different story in January.
And folks, you can come over to our website at TFNN. You can test drive Steve's newsletter. You go to newsletters, go to trading newsletters, hit mastering probability, 30 days absolutely free. Steve, you have a great one, a safe one. Look forward to the show tomorrow. And of course, happy Thanksgiving, man.
Thanks, Tom. You too.
Thank you.
Bye.
Stay right there, folks. Coming right back. We have the Dow Industrials right now up 62. NASDAQ is up 4. S&Ps are up 4.5. Coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials are up 67. You get the NASDAQ trading up 4. S&Ps are up 5. If we take a look inside the Dow Industrials, strength versus the weakness out here. The strength, number-wise, you're putting 18 positive. Home Depot's putting 18 positive points into the market. Boeing's putting 15. 3M's putting 14. IBM's putting 11. Taken away from it, Merck, -4. -6 rather, Disney -4, Coke -1. Let's go over to Home Depot and see what good old Home Depot's doing. So Home Depot's trading $170.40. You're breaking out. Let's see what's going to happen on a weekly here. I think this is an ABC up anyway. Let's see. Yeah, we did. This was this broke last week. Okay, so you got 144. It's a nice one. 23 bucks. Approximately 23. So 183. You're at 170. 183 is game. It's a big number. Let's go take a look at Lowe's and see if Lowe's is doing that. Lowe's is going up, but Lowe's is not. You're not quite at the top of the range at Lowe's. You know, on the morning show, we were talking about the aspect of employment, full employment, the economy. You can see, I could see over the weekend, folks, we were in Lowe's and at Home Depot. Bottom line is that you can see how we're at full employment or very close to it, because they're having a really hard time hiring people. That they had some bodies in there, but there were plenty of bodies that couldn't tell you where either their equipment was or, in fact, you know, what rows they were in and all of the above. Because I was in there, we were in there shopping, and we actually found the lights that we were looking for, because we understand the store, meaning that when you're looking at the displays, right above all the displays, of course, are all the boxes with all the numbers on them. Bottom line is that it took a bit. It took a bit in both cases in order to get what we needed. You know, they got it, and they were more than happy to do it. But the knowledge wasn't there inside the store. That's the real bottom line. So it was really intriguing watching that. That's the first time that I've actually seen that on a larger basis, meaning it was in both stores. And it happened, it was like, wow, okay. So they're having a tough time getting help. And that's going to make a huge difference going forward. You know, it's interesting, even with the tax bill saying, okay, you're going to have the economy going forward with the tax bill. It's like, okay, it seems like the economy is really flying. So if the economy is going to go forward, where the work is going to come from? And then if the economy is going to go forward, well, is the Fed going to basically ramp the rates up ASAP to basically tramp that baby down? You know, we were talking about at the beginning of the show when I was doing the first 12-minute update. What is happening, is it's happening pretty quickly, is that the yield curve is flattening out. And what that means is that you could have the 10-year, let's say if the 10-year just keeps ticking down, you know, 2, 3, 4 ticks, and the 30-year stays where it is, what you're going to end up seeing is that the basis points in between the 10-year, right now it's, let me see, so we're at 2.363 on the 10-year. And then if we go to the 30, we can start keeping track of this. It's 2.781. So you got what, 1. You're dealing right now with 418 ticks, okay, between the 10 and the 30. Well, there's traders that are thinking that that's actually going to go all the way down to 80 ticks. If that ever happens, that would be amazing, you know. And what that is that when if the Fed keeps raising short-term rates, that 10-year, you know, basically would edge up. Now, that being said, that it is flattening out. That being said, the way I am still in the camp that these rates are actually still going down. And, you know, because each and every time the bond market gets hit, guess what? It comes roaring back again. And if we look at the TLT will not back off the top of this range right now. And that's saying the TLT is at 126.31, saying, hey, it wants to go to September 8th high again. You know, September 7th and the September 8th, 129.16. September 8th, by the way, if you're trading any type of currency or metals, that's a big day. And we get a question is why are the rates going down? Well, they are. they're going. I would say that they are because the world rates are down. The competition. That's what's going on here. You got United Kingdom still is at 1.2%. France is at 0.6%. There's just more money. So picture, it's the amount of money that is going after an asset. That's all that matters. And we're awash in cash right now. That's what's going on. Now that's going to catch up with us though. And I think as we start watching this yield curve, that's going to be the real heads up. Because if this yield curve really does flatten out down to 80 basis points, which some traders think it's going to happen, if that happens, folks, this Fed's going to go bonkers. Whether it's at the beginning, I don't think it won't be the beginning of 2018, but we start getting to the end of 2018, they could lift those rates. And if they lift them really fast, as they say, they will take the punch bowl away. And the punch bowl this particular time, if in fact that happens, is going to be pretty intense because there's plenty of folks that are 35 or less that have never seen an interest rate go up. Think about that for a second. Think about get yourself back when you're 35, and you've never ever seen an interest rate go up because they haven't. That is going to be like a whole different ball game. 877-927-6648. Let's see what the good old market wants to do coming into this closeout here. So we go take a look at the E-minis, the S&Ps. The S&Ps right now, 2580. You're up 375. We started the day off at 2576. We're probably going to end it right at 2576. We're probably going to end up with a flat market out here. It's going to be intriguing if that's what shakes out. So if we go over and let's go to the IWM, the small caps for a second. Small caps out here up 82 cents, and they're going for the highs once again. The high in the IWM is 150.63, and that thing, that went up Thursday and Friday. That had some juice on the way up, so I expect that that's going to try to tag that high. And with it being Thanksgiving week, this is a big deal, folks, because what you're going to get, we're going to get regular trading today, regular trading tomorrow. Wednesday, by noon, people start leaving the office. Thursday, you closed. Friday is trading until 1 o'clock in the afternoon. And depending on how long you've been listening to me, I have seen some wild days. We haven't had one for a while on Friday after Thanksgiving, but one of the most wildest days I ever seen in the marketplace was that. And the market went to the moon. And then it came all the way back down that following Monday. That was in the 90s. You stay right here, folks. We're coming right back. Dow up 60, NASDAQ up 2.5, S&P's up 4. Coming right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Let's go to the world of energy. We go to the world of finance, actually, XLF. XLF is trading up 12 cents out here. We are $26.28. Bring this back. So you're going into a downdraft from the 7th of November. The low there is 26.31. You came down with 70 million. It's going to need a lot more than this to break through that. You're doing 30 million right now. Let's go to Berkshire Hathaway first, BRK. We take a look at Berkshire. Berkshire's at 181, and that is off the high of 190. This looks like it's setting up a small ABC down, actually, to get into the 172 area. If we go into the IBB, now this is really intriguing. So the IBB, folks, is trading down $2.89. You're at 308. Now, the highs in the IBB, well, we're trading where we were trading in October of 2014. You know, so the IBB is, you know, it's down 8% this year, but bottom line is that, you know, when you take a look at that aspect, well, that's been quite a while. Now, I was going through the 13F filings this morning, and it's pretty cool what's happening inside the IBB. This comes back to the aspect of understanding ETF structures. So inside the IBB, when you take a look at it, your weighting structure, you get Biogen is 8.8%, Amgen 8.2%, Gilead 7.4%, Celgene 6.4%, Regeneron 6.2%. Now, watch what happens here. This is pretty cool. So I bring up Biogen first. Now, Biogen was going into Biogen was the first biotech that actually fell apart. It was the strongest one, and then in July of 2015, it got slammed. It went from $279 to $276 in a month. Now, watch this. We bring this up. What you're going to see, we bring up the 13F filings. Now, when we bring up the filings, you're going to see, first off, that BlackRock, see at the very top, they're sellers, right? Fidelity are buyers. Now, in this case with Biogen, it's the same. BlackRock sold 1.1 million shares. Fidelity bought 1.1 million. Fidelity now owns 3.3% of Biogen. Well, when I talk about Fidelity a lot, of course, we talk about Wellington, right? Wellington's a seller. State Street, let's see, where's State Street? I don't see State Street in here. Okay, so now I'm going to bring up the next one. So you saw that in that case, BlackRock and Fidelity were about the same, right? One was buying, one was selling. Now we bring up Amgen. We take a look at the same filings. What you're going to see is that Fidelity bought $2 million. BlackRock bought $343,000. Okay. Now you go to Gilead. So in that case, Fidelity was buying more, right? We go to Gilead. That's the third weighting structure. We pull this up. What you're going to see, BlackRock selling 2.6 million, Fidelity buying 4.6, right? Okay. Regeneron. That's trading 384. Fidelity selling 48, BlackRock selling 58. Okay, nothing heavy there. Now, let me do this one more. Okay, so what was the next one that I didn't do? 1 second. I missed one of the top 5. Celgene, that's right, Celgene. Which Celgene got absolutely smoked, too. So Celgene's trading 103. You can see BlackRock sold 1.2, Fidelity bought 4.7. Now, this was at the filing, the last filing, September 30th. What's so intriguing about this is that you've had the biotechs, and we take a look at it, it's been a one-way trade since October 2nd. So Fidelity was buying all the way down, because that's September 30th. No, 1 second. No, September 30th close. Okay, so that's September 30th. So September 30th is, yeah, the IBB would be at 333. And with all of that buying, because that's the breakout, meaning the stop, September 30th, the IBB is pulled back dramatically. And I suspect what that is this. This is where the battle comes in about you can have monsters actually coming in and buying, right? But in fact, as just even retail and institutions are selling the IBB, what ends up happening simultaneously as you sell the stock, as you sell the ETF sponsor has to sell each and every one of those individual stocks. So I thought it was really intriguing because you can see when I first brought it up, that's one of the first times that I've actually seen inside a sector that a monster like Fidelity is still buying, but yet that sector was going down. And that's just telling me that there's overwhelming selling that is happening inside that IBB, and even one monster can't hold it up at this particular point. So it's going to be wild watching this whole thing shake out, because when you look at the IBB, it looks to me like 245 is where this baby wants to go. We pull this back, and we're at 240 to 240. Yeah, 245 is the high of April of 2014, and the last swing lows out here are 240 too. So that thing looks like it's set up, and long consolidation, no doubt about that. Let's go over to Walmart. We talk about long consolidations. When Walmart broke out of that consolidation, Walmart's trading 97.48. That's up a penny today. Amazon, and this is where of course, Black Friday is coming, this coming Friday. We're at 11.24 right now on Amazon. It's a big number. And the delivery mechanisms, what's going to happen out here, no doubt, and that's what we're going to be getting a lot of news stories about how many people shopping, how long is it taking to get to your house, how many breakdowns are there, all of the above. And that's, we go back to UPS and FedEx for a second. UPS is off its high. That's 113. The high was 120. FedEx, also off its high. That had a high out here, 231. You're at 217. I think what's going to be intriguing is, I don't think we'll get this information until January, but how many delivery folks has Amazon hired, full-time, part-time, and how many deliveries are they actually doing, and wiping that middle land out also. It's out there, and it's out there in spades. The real question is going to be, is it taken away from their extra overflow? This is Tom O'Brien. This is TFNN. Dow Industrials right now up 66. NASDAQ is up 5. S&Ps are up 4.5. Coming right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Basil Chapman has just announced a special subscriber event taking place Monday, November 20th from 5 till 6:30 p.m. Eastern Time. What can you anticipate for 2018? In this 90-minute webinar for subscribers to Basil's daily trading newsletter, The Opening Call, he will be discussing a variety of topics for the coming year, including, can high techs continue to lead? Will the financials be affected by yields, and where will yields be in 2018? The chances for inflation or deflation? What stocks could be affected or weakened in the coming year, as well as Basil's long-term outlook for the dollar and gold, as well as many other topics. For all the details and to sign up for a 30-day free trial to The Opening Call, visit the front page of TFNN.com today. With nothing to risk, this is a great time to try out Basil's daily trading newsletter. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is up 69, NASDAQ's up 5, S&Ps are up 4.5. And coming up right here, TFNN, folks, is at 5 o'clock today. I'm Mr. Basil Chapman. He is having his opening call subscriber event. This is an event that's going to be fantastic. And what he's going to be talking about is what can we anticipate in 2018. If you'd like to sign up for this, it's very easy to do. You come over to our website at TFNN. You can sign up. You can test drive Basil's newsletter for 30 days. You get the newsletter. You're going to get in the event tonight, which starts at 5 o'clock. It's 5 to 6:30 tonight. If you can't make it live, don't worry about it. It'll be on your page for 30 days. You can watch it as many times as you want. So Basil's going to be talking about, can high techs continue to lead? Will the financials be impacted by yields, and where will the yields be? Yeah, that's the million-dollar question. There's no doubt about that. The chances for inflation, deflation, the dollar and gold's long-term outlook, autos, real estate, and the socioeconomic political nuances in the next phase. Those socioeconomic nuances, folks, are pretty intense right now. There's no doubt. Worldwide stock market euphoric phase, possibly the possibility of a serious consolidation before that happens. Politically, the chances for a third party are increasing. Stocks that could benefit all weekend. So if you'd like to sign up for a great workshop tonight, 5 to 6:30, just come over to our website. You can test drive his newsletter 30 Days, which is a great newsletter. You get the workshop, get the whole ball of wax, coming right up at 5 o'clock. As we come into the close out here, you got the Dow up 76, NASDAQ is up 7, S&Ps are up 5.5. It looks like they're closing them up right kind of where, no, not where we opened. We opened a little bit lower. S&Ps right now at 25.81, and volume out here, I suspect there's going to be light volume. We're at 500 million on the NYSE. That'll end up doing about 650, which is light. On the NASDAQ Composite, we're at 1.58. That'll come in at about 1.88. You stay right there, folks. We're coming back with some numbers after the close. Dow Industrials up 73, NASDAQ up 6, S&P's up 5. Coming right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you?
I'm doing great. How you been, man?
Not bad. You know, you guys, over the time and with a few of your courses and seminars, you taught me how to fish.
That's a beautiful thing, brother.
Yeah, it's true. And so what happens is I still listen all the time, and to not only you, but some of the others.
Sure.
To, get an idea where the fish might be biting. As far as your services, they're a bargain. When you compare them to a certain prominent man with real estate courses at $35,000 and no contact with the lecturers afterwards at all, and you think of what you guys do for a few hundred, and you can get access and ask questions forever, it's a great deal.
No, we appreciate the growling problem with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Have a great week, Thanksgiving week. Always do your best. Take action on your ideas. Doing your best means take action. You can have many great ideas in your head, but without action on that idea, there'd be no manifestation, no results, and no reward. I love this card. Market wise, let's take a look at it out here. Dow Industrials up 72, NASDAQ up 7, S&P's up 6.5. Gold contract on $19.20, trading at $12.7730 an ounce. Silver down 46 cents, $16.91 an ounce. Platinum off $30, $9.22 an ounce. All three of them, folks. You get volume on the move down. They haven't broken a swing point, but let's get right into them first. So gold goes from a price point of $12.95 to $12.74. You're at $12.7730. We've done almost 400,000 contracts, which is an expansion of volume. You're going into 434,000 contracts, but that's way too close. That's the bottom line. So, the bullish part, it didn't break a swing point. The bearish part is that you got an expansion of volume. So I expect what you're going to see is that the November 14th low of 1269 will go, that the contract will go after it. Silver, we take a look at the silver contract. Silver contract out here, there you go. Silver contract right now, it was down 2.6% today, whereas gold was off 1.4, 46 cents. Silver's always much higher, much more volatile than gold. That being said, what silver didn't do is that didn't break a swing point, swing low either. We had the volume behind the move. I expect you're going to see silver test 1688. We got the 1692 out here today. Notes, well, here, let's go into the S&P next. We take a look at the SPY. SPY closed at, basically almost set its highs. We're at 1258.28. Your high is 1259.35. You did volume of 42 million. We go take a look at the Dow Industrials. Dow Industrials closed up 72, and the Dow looks a little weak, actually. It's going to be intriguing watching this shake out. The Dow had a hard time getting up to the 23,492 area yesterday. Today, rather. That was the high of last Thursday. We got to 456, and then bottom line, it closed out at 430, up 72 bucks. The composite, we take a look at the NASDAQ composite. What we have with the composite is advertised. That's closed up $7.90. You're at 67.90. And the first high generated out there was 67.95. Bottom line, you are right at all those highs. King Dollar. What do we have with King Dollar? King Dollar is trading at a price point up 430 ticks. We did 19,000 contracts. Now we came down on 27,000. King Dollar was in an ABC structure on the way up. Never reached its full price projection, which was the 95,940 mark. We got down last week to 93,305, and we had some volume down there. So I expect good old King Dollar is going to try to build some cause to break under its breakout area of the 26th, which is 93,365. So it's going to be intriguing watching this shake out. If, in fact, we're going to go from a dead cat bounce, which the King Dollar has been doing, to a much larger move on the way down. Some of the high volume stocks out here today, you had GE down 23 cents. You had Snap down 58 cents. Micron Tech was up $1.48. You had Verizon up 70 cents. Merck was off $1. Let me go pull Merck. Man, Merck's in tough shape. I don't know what's behind the curtain there, but whatever's behind the curtain is not good. This has been a one-way trade. 2 months ago, September 18th, Merck was at $66. You're at 54. It broke your swing low today of $54.51 and 41 cents. Yeah, Merck's going to go after this high volume swing low at $45. Get back November of 2015. Put this on a monthly. I see what okay. If you want to see a classic, what you had with Merck was coming into its 08 downdraft. The high there was 61. It had come down with 468 million. First time up there, it did 231. Couldn't handle it. Went from $63 down to 45 rather. Made it again. Couldn't handle it again, and it came off the highs with volume. So, excuse me, folks. What you have here is you have a big consolidation. This is going to be a monster consolidation. Yeah. The bottom of that consolidation, which is dangerous, is $45. $45.69. But you can kind of see this chart on a much longer basis, how you came off a high in 2000 of 90 bucks. You get to a low of 26. You did a counter trend bounce to 61. You get down to 20. This is really going to be dangerous. This is going to be, because the way that Merck is actually trading, you could actually go to the highs of the lows, which would be pretty devastating in Merck's case. Some of the other Dow stocks Out here, you had ExxonMobil was up 31 cents. Boeing was up 237. Let's go take a look at Boeing. Yeah, Boeing, it looks like it's still almost at a all-time high. This has been a one-way trade on Boeing. And Boeing is just about parabolic. You know, Boeing, if we bring this back, August of 2016 was 129. You're at 264. And that is one straight line move, and that straight line has been just up. We go take a look at the GM is up $1, $44.88. IBM at $1.54, up $1.54. So IBM was one of the movers inside the Dow Industrials today. Let's go take a look at IBM. Yeah, it's a dead cat bounce. So IBM is down from 162. You're at 150. This is a gap away lower. Well, she's staying out of the lower range anyway. 137. So if she gets back inside 137, watch out. This is Tom O'Brien. This is TFNN. You stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished up 72. NASDAQ finished up 7. S&P's up 5.5. Let's go over to our man, Mr. Basil Chapman. And we get a big day coming on, folks, right here. 1 hour, well, 45 minutes from now, our man, Mr. Basil Chapman, he's going to be doing an opening call subscriber event. And what that's going to be all about, what can we anticipate for 2018? Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great, man. Yourself?
Very well, thank you.
So, 2018, here we come.
That's it, and we keep talking about it, and it gets closer and closer.
Oh, my God. That's so true.
It is amazing. So this is a very interesting thing, because if you think of the number of market days left, there really aren't that many.
There aren't.
We have the holidays, and it's light trading. You mentioned just now, very light trading. And normally my contention is, excuse me, that when a market survives what very often is a September-October pullback, this year we didn't even have it, usually the market lands up for the year, ending the year, close to or at an all-time high. So there are a couple of things that are going on right now, and that is you've got the tax bill, you've got a little conflagration going on there. We don't know how that's going to be resolved. However, what's really important is I believe that one of the reasons why the overall market has been kept higher over the last couple of weeks is that there is the potential that eventually there will be a bill, and that'll be a favorable bill to the stock market. But what I'm looking at here is there's been really a high-level consolidation, and that's what I'm going to focus on tonight.
Okay.
Is there going to be some kind of a rotation, which I believe there will be, over the coming 6 to 8 weeks going into the beginning of the year? I'm going to talk about what happens to the market, what levels we need to look at, what's going to happen with the interest rates. As the interest rates have been pulling back, and my contention has been that the TLT, the bonds, if they continue rallying, that'll equate to money coming out of equities and probably going into the safety of bonds as people, because you spoke about Merck just now. Not everything's going up. Some stocks actually are down quite sharply. So it's, in a sense, it's been a mixed market, but the leaders like the semiconductors, I'm going to be talking about them, the XLK, the tech S&P ETF, these are sectors that have been leading the market on the way up. And then there was a bit of a consolidation earlier in the year. They came down, then they went to new highs. So this is going to be very important. And you were looking at the chart of Boeing. There are a lot of stocks that have gone straight up. And normally you would expect that at some point, at best, there'll be like a rectangle consolidation, sideways move where it doesn't go higher. It makes some kind of a low and then just bounces off that low. Or you have that inverted V, and I'm going to be talking about these patterns tonight. What I also am looking at, for instance, we've had for a long time now, we've had General Motors, and General Motors,
yes,
it's really a surprise because their reviews are getting, they were really improving, especially with Buick. Now the reviews are not all that good, and yet people must be buying because it's acting very well. But as a chart formation, look at the week, look at the monthly, how beautifully it's done. So you've got to be very selective here. We were in Bank of America, we took about a 10% profit. It's been pulling back. And I think that was part of what I was looking at, that if bonds rise, yields pull back, that should impact the XLF, which are the financials, somewhat negatively. I don't think it's like a big negative, but it is a negative. It stops the upside. I'm going to be talking about that. Then I'm going to be talking about real estate. I'm talking about the dollar. You remember we spoke about the dollar back when I said it's made a perfect 70-week arch formation and came down to the exact 91 area that was in May 2015. So for subscribers, we went long. It's had a very nice run. I have to make a decision here. Is this a counter trend rally, or is this something a little bit stronger? And that really impacts gold. And we can see that gold's really struggling. It hasn't broken down at all. I think gold is really having a well-deserved sideways consolidation. So those are the things I'm going to be putting together with other, what I call socioeconomic, political aspects, which are really more longer term. These are the big trends that I look at, and I'll be talking about that. But what's really important is that I'll be talking about stocks that I think will benefit going into 2018, and ones that have had a huge move need to consolidate. And if they do consolidate, what do you want to be looking at for the upside potential? We've already got one or two stocks sort of under the radar that I think they're doing well, but I would like to see them rally further to show me that there will be individual stocks that, regardless of what the market does, these are stocks that can move very nicely. So I'm really looking for, this is a perfect time for a webinar like this. Yeah.
You know, when you look at the chances for inflation, deflation, we've been talking about this for a long time.
Yes.
You know, somehow, folks, I get a feeling inflation's going to come roaring because, you know, I don't know if you heard me earlier. We were in Home Depot and Lowe's over the weekend, and
Yes.
I could see that they were having a hard time getting help. That had any.
I was also. In fact, have you seen the signs? They don't just have a sign saying what help wanted. They actually articulate. We want a manager for this. I've never seen that before.
I didn't see that, but I could see the full employment, and then I start thinking about this. It's okay. So you got full employment happening. Cash is everywhere. You know, so if you're growing a business, folks, you need people. So if there's no more people to grow a business, and there's so much cash that the cash is just getting thrown around, inflation's got to come because they got to up the cash to the people to get some good people.
Right. Funny you mentioned it's actually one of the slides I've got is exactly the words are exactly. I said when inflation does come, the Fed's going to be real surprised at the speed.
Yeah. It seems.
And one of the things that's really important is what you have to have, like rent, what you have to pay for rent and medical care.
Right.
These are very important things that you have no choice, and I don't think any politician's ever been to. This is something beyond them, because if they had to put that into the inflationary factor, we would be having real inflation. But I'm also talking about the commoditization of countries around the world wanting your dollar, and therefore they're pushing prices down. They have no choice. Plus, you've got Amazon, which has done it to the retailers.
Yeah.
Now the retailers are fighting back through Walmart. I think this is a fascinating time, and the market is picking winners and losers.
Yeah.
And you can see that.
Yeah. What is interesting, like I guess Urban just come out, and some of these, at least some of these brick and mortar now, folks, look like they've turned the corner. So the ones that are still alive, I guess, will stay alive.
Yes.
And that's good for the malls at least. You know
No,
what
I think
mean?
it's good for everyone.
Yeah,
I mean,
it is.
and not only that, when you go to a shopping market, even with Amazon taking everything away from them, you can't get parking. At least around here, you can't get parking.
Right.
So people are going. I think it's very selective. But what's very interesting is I think it's the fight for your dollar that's forcing them to have, like Lord & Taylor here is really a classy outfit, wonderful retailer.
Yeah.
And I think they just had a relationship there with, who's it? I'm trying to think now. Walmart. Yeah, I think Walmart is connected now with Lord & Taylor. So,
yeah, they got to hook up like that, right?
Yeah, and they're being pushed. And then, of course, not sales and everything, but the sales that they have on wonderful quality stuff, it's really good. So I think that the buyer is going to be a winner to a certain extent. But what's really important is that this is a transition period. The Macy's, etc., they've had to figure it out. And I'll be talking about that tonight.
Folks, so you can come over. You can test drive Basil's newsletter right now. You'll be in that workshop 34 minutes from now. Check it out right in the front page of TFNN. Basil, look forward to the workshop 34 minutes.
Thank you very much, and happy Thanksgiving to everyone.
Happy Thanksgiving, Basil. Thanks for all the help. Really appreciate it, man.
Thank
Stay right there, folks. Come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. This gets interesting. So let's see. The Treasury announced a $5 billion cut in this week's 4-week auction from $45 billion to $45 billion from $50 billion. An indication is preparing to pay down T-bills and wind down the cash balance before the debt ceiling suspension ends on December 8th. Treasury is going to sell $45 billion of the 4-week Treasury of the 4-week bills Tuesday. That's going to raise an additional $6 billion in cash, the smallest amount since October 12th. The overall market remains under pressure due to the surge in supply, but the tide has begun to turn now with the debt ceiling in view. Treasury sold $42 billion 3-month bills at 1.285 this morning at 11:30. The supply and demand curve, folks, inside the Treasury market right now is small, meaning the demand is higher than the supply, and we'll see what kind of tax bills are coming in at the end of this year, and that could make it even smaller. The thing that's going to be pretty wild is watching how this whole tax bill plays out before the end of the year, because when you can see market-wise, you're up big. The real question is going to be, do people take money off the table, or do they just keep it on the table, roll the baby out, and hope that the tax bills will go down even more dramatically next year? And most of this has to do with the aspect of not a long-term gain. It'll be the short-term gain. Because, right now the long-term gain is 20%, right? Holding an equity. Short-term gain is whatever, percentile you are in at paying taxes. So I can see as we get closer to the end of the year, if in fact that tax bill is going to get routed and rooted into next year, that's when the bill would take effect. Well, guess what? What do you think? This is where it's going to be pretty wild. Is that picture that let's just picture we can go 25, 30, 35% tax bracket, right? That's what you're in. And if, in fact, that is going to go down, let's say, to 20%. Well, what's going to happen is that you're not going to sell December 31st. You're going to try to hold it to 2018. Because the tax bill is not going to get enforced until 2018, or maybe 2019 for corporations. You can imagine the aspect of who's going to get out the door, when are they going to get out the door, and will everyone want to get out the door on the first day of January? Because then what it does end up happening is that you don't have to pay taxes on that till the following year. You can use that money for quite some time. Ma Bell and the Justice Department look like they're going to go after it. U.S. Justice Department is going to be suing Ma Bell over its $85.4 billion takeover of Time Warner, and that suit's going to be on antitrust. The Justice Department said it plans to announce a significant antitrust matter Monday afternoon without specifying the topic. The lawsuit would take the storm of controversy surrounding the deal to a new level in the courtroom, where the Justice Department will make its case as to why the combination harms competition and asks the judge to block the tie-up. Let's go just look at that Ma Bell chart for a second. So that's down from 40. You're at 34.64. You're still in the consolidation. Yeah, this consolidation. Low, looks like actually the low of that consolidation's already been hit. It looks like it was $30.96. So that is going to be a long time running. No doubt about that. Meaning, if you're going to be in court with the Justice Department, man, you better have some deep pockets, which Ma Bell does. Let's go up, look at Palo Alto Networks. This symbol is PANW. That closed at 142. That is trading right now at 152, up $10. That's a move for you. And well, it's not going to be high, all-time highs. Up, yeah, their all-time high is 200. That's down quite a bit. Excuse me, folks. So, numbers go like this. The estimate was 68 cents. They made 74. Good number. Revenue estimate, 488. They made 505. Big number, too. Both of those are really big numbers. For the year, the estimate had been 2.15 billion. Now they, no, the range was 2.11 billion to 2.17. Now they have a new range of 2.15 to 2.19, so it's a big number. For the year, the earnings per share estimate was $3.31. They are going to make $3.35 to $3.41, and their revenue estimate also still a good estimate. The estimate was 519 million. Now the low end of that is 518. The high end is 525. So that, no doubt, is a big number. Urban Outfitters. Let's go take a look at Urban Outfitters. That closed at $28.27. That's trading at the same price. Let's see. Yeah, so this is, oh, I see. This is Urban Outfitters. This is Anthropology also. Okay, cool. That's a pretty cool store. Okay, so numbers go like this. The estimate was 33 cents. They made 41. That's a good number. Gross margin is still, they were at their 33.4% gross margin. Same store sale was +1 versus minus, they're expecting minus 2.5%. So that's not a bad number. It's a good number. It's a real good number. Let's put this on a much longer term chart and see what we have. So this has been up the last 3 months. You're at $16.68 in August. You're at $28. Yeah, they're going to survive. How about that? Man, this is one monster consolidation. Look at this. This is crazy. This has been consolidating, folks, since 2004. Excuse me. 2004. Wow. So the top of the consolidation is approximately $40. The bottom of the consolidation is $12. Yeah. Well, there you go. There's another company that looks like they are going to make it. And it seems that what has happened here is that a bunch of the retailers that have been last man standing looks like they're going to make it in the brick and mortar. And I suspect that's just because there's, well, there's less competition in their brick and mortar space, number one. And I guess, you know, folks are still, well, folks are spending their money. The real question is where they spend the money, online or at the brick and mortar. Janet Yellen once that Jerome Powell does get Senate confirmation and gets sworn in, is going to give up her seat as a governor. She could, you know, when you're in the Fed, folks, okay, those terms are long. And her term actually doesn't end until 2024. But she's, bottom line, going to pack it in. You stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Basil Chapman has just announced a special subscriber event taking place Monday, November 20th from 5 till 6:30 p.m. Eastern Time. What can you anticipate for 2018? In this 90-minute webinar for subscribers to Basil's daily trading newsletter, The Opening Call, he will be discussing a variety of topics for the coming year, including, can high techs continue to lead? Will the financials be affected by yields, and where will yields be in 2018? The chances for inflation or deflation? What stocks could be affected or weakened in the coming year, as well as Basil's long-term outlook for the dollar and gold, as well as many other topics. For all the details and to sign up for a 30-day free trial to The Opening Call, visit the front page of TFNN.com today. With nothing to risk, this is a great time to try out Basil's daily trading newsletter. Sign up today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And so, folks, the way that the chairmanship works in the Federal Reserve, her term is up in February as the chairman. You have to be a governor. You get two different deals here. That's what ends up happening. So as a Fed governor, her term doesn't end until January 31st, 2024. But, you know, most times, you know, if you're going to be the end of the Federal Reserve, you're going to back off anyway. So they get they have really long terms. I think it's 12-year terms, actually. You know, so it's... Now, the way that's going to do, of course, this is going to put the fourth. So now we still need a vice chair, and then I believe there's two other. Dudley's resigning. So there's quite a few vacancies. I believe there's going to be 4 vacancies inside the Fed. So the real question is going to be what type of Fed are we going to get? And that is going to be a wild card, man. Because what does end up happening is that they can go up on rates, and they can go up on rates quick. And we'll find out if that's the route they're going to take. If we actually go look at the, let's go look at the Fed fund rate for a second. Well, it's for December. Whoa, wait a second. Yeah. Something's wrong, not right with this. WIRP, 1 second. Okay, so. Yeah, the probability is 97% going up in December. Not quite sure why this is all in the 90s after that. Man, this is going to be pretty intense. I gotta actually look at this. So if you're watching Tiger TV, what you're going to see here is that it looks like at every single meeting, it almost looks like they're saying that the rates are going to go up, but that can't be right. That's better not be right. In this particular case, I suspect December 13th, yeah, we'll get a 25 basis point rise in the short-term rate. And we'll see if that follows through right inside the yield curve, into the mortgage rates also. Because right now, we still are at 2.367. If we put this for a year, that's right in the middle of the range for the past 12 months. The low of the past 12 months have been 2.03, the high 2.62. So if you're looking to get mortgages, you're going to refinance, go do it. You know, because bottom line is that when we take a look at these rates, realistically, there should be only a one-way deal going. But we've been saying, no, I haven't been saying that forever, but folks have thought that forever. And it totally makes sense common sense-wise. But guess what? When we take a look at this 30-year, the 30-year hasn't broken a major swing point since 2000. 2000. We've been going up since 2000. That's what's amazing. Now, we backed off in, the high is in July of 2016 was the low in the markets, meaning the lowest rate, interest rate since 1980. We came down. That's when the 30-year was at 175, 177. 30-year came down to 148. You're at 153. The 30-year, I believe, has to break 147. It's 140. Yeah, it's 140. Yeah, it's 147.07 to break a major swing. You know, each and every time that we've taken these big dives down, it's built cause, got up again. And listen, it can happen again. The way that would, if in fact that's going to happen, it's like, okay, what's the wild card inside the economy that they can't raise rates? And it very well, yeah, listen, it could be the deficit. You know, bottom line is that if they slash rates, if they slash the tax rate across, let's say, all the corporations individually, somewhat, bottom line, deficit would go up. If the deficit goes up, what ends up happening, dollar will go down. That happens, then that's going to push into the interest rate structure, and it will push in pretty quick. What we do have out here, as Basil and I was just talking about, though, it seems like we're awash with cash. And if that's the case, the real question is going to be, when does it come into the inflation workplace? And that's when inflation can really catch on. And it's not even close at this point. There's no doubt. It's not even close. Let's go and take a look at the GDX, since we had the gold and silvers got smacked around out here today. GDX acted pretty good. GDX was only down 25 cents. They're trading 22.54. Now, this lowest swing point out here is at 22.30. We go take a look at the XAU, the HUI. XAU, yeah, this held up too. This is good. You know, XAU down 87 cents, $80.01. Gold Bugs Index. Also held up. Down $2, but guess what? Didn't get to that swing. Lowest swing point in the gold bugs index is 184, and we're at 185.80 right now. If you do want to come to Basil's workshop, folks, just come over to our website at TFNN. You're going to see right on the front page, get it right up here. You see right in the front page, you just hit, I'm Mr. Basil Chapman. It's right in the carousel. As you hit that in the carousel, your test drive his newsletter, 30 days absolutely free. The opening call subscriber event, he's going to be talking about what we can anticipate for 2018. And it is absolutely amazing that 2018 is here. This workshop's going to be from 5 to 6:30 tonight. It's free as long as you're a subscriber. You can test drive being a subscriber. And bottom line is, if you can't make it live, we put it on your page. You can get it 30 days. Take a look at it over and over and over again, so you can really understand what Basil's looking for in 2018. Apple, we take a look at Apple, and of course, at the holidays, Apple is going to be looking to sell some big numbers. You know, what does happen in what Apple does in their financials, folks, their first quarter is the last quarter. Normally, your first quarter would be January, February, March. That's not how Apple works out. They want to get the December month inside their first fiscal quarter. So it's pretty wild the way Apple works. So they're looking, at the end of this quarter, they're looking to do 86 million. Oh, no, it's 86 million. 86 billion. 86 billion. They're looking to do almost $1 billion a day in 90 days. Isn't that wild? That is, every year, this is their biggest quarter. So we'll see. And out of that, the iPhone, 141 billion, services 30 billion, Macintosh 25 billion, iPod 19 billion. Big numbers. You stay right there, folks. Coming right back. Don't forget, we're going to go to Basil's workshop. Come over, sign up right now. Dow Industrials finished up 72. NASDAQ up 7.5. S&P's up 6. Come right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Bloomin' Brands. We'll see where this shakes out. This was up 227 today, and this was intraday. And, we've seen this happen a lot more lately, which is really unusual. Bottom line, most of the time, when you get material information, it's not coming out in the middle of the day. In this particular case, we've seen this the last few months, though, in a big way. If we go take a look at, this is all about JANA Partners, who sometimes, it's an activist fund run by Barry Rosenstein, has taken a stake in Bloomin' Brands and plans to push for changes at the restaurant chain owner. So bottom line, that baby did go up fast and furious. Let's go back to Amazon for a second as to what they do. We had a question as to what they do per quarter. Amazon they're expecting this quarter here, they expect to do $59 billion with the beat. And I suspect that was in the aspect of what Apple does. So it is pretty amazing that Apple is expecting to do $86 billion, and Amazon's going to be expecting to do $59 billion. So, oh man, it's pretty intense. There's no doubt about that. And of course, the growth numbers are substantial, more so with Amazon though than with Apple. Amazon right now is growing at 24.4% in North America, 13.6% in international, and then their web business, AWS, is growing at 57.8%, where Apple is growing at approximately 6 to 11%, 6% in America, 7% in Europe, 5% in Japan. Their iPhone has a 3-year growth rate of 11.48. So when you take a look at both of them, Amazon is growing much faster. Apple's selling one product. Pretty amazing. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you, folks. Have a blast with it. Look forward to speaking right back here tomorrow morning, 9 o'clock. Wow! Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.